Today is the 15th of August 2022. It is a public holiday in Italy, Ferragosto, quindi buon Ferragosto a tutti in Italia. If you're anywhere else in the world, then it is probably business as usual. My name is David Hickson, and in today's market update, we're going to be taking a look at the S&P 500, working with data that is of the SPX and ES futures. I am going to be delving a little deeper into the analysis that I discussed last week. I hope that by focusing on the details, it is helping you to understand what we call the sentient approach to trading financial markets on the basis of Hurst cycles. Because the time frame that I'm looking at in these market update videos is generally of several weeks and sometimes several months in length, I think it is useful occasionally to focus in on the details to show you how we can take the bigger picture that I'm presenting in these market updates and refine our understanding of what is happening by looking at shorter time frame charts, such as the 1 hour charts that we will be looking at in today's video. So here is the S&P 500. This is, of course, one of the analyses that we've been discussing in these market updates for several weeks. It's probably months by now. We have an 18-month cycle trough in early October and a 40-week cycle trough in June of this year. In another analysis that I have presented in the past few market updates about the S&P 500, we have the possibility that there is an 18-month cycle trough that formed in June. Let's take a very quick look at that. Here is that analysis. It is based on what Hurst called the initial cyclic model, which uses the results of the spectral analysis that Sentient Trader performs at the beginning of every analysis that it does, and it uses the evidence of the cycles that are present in the data as a result of that spectral analysis, or at least found in the spectral analysis, to restructure the nominal model that it is using for the analysis. I've discussed this in previous market updates, so I'm not going to repeat it here. The important thing is that we still have, of course, a big cycle trough of 4.5 year magnitude, 54-month magnitude in March of 2020, and we have since then had two 18-month cycles play out. Of course, these 18-month cycles are not of 18-month in duration because we're working with a slightly different nominal model. I still call them 18-month cycles because it would be terribly confusing to keep throwing around different cycle lengths. The actual cycle length that is being used in this analysis is of about 15 months, and you can see that recently that cycle has been beating with a wavelength of 14.5 months. And so it is possible, as I've discussed in the past few videos, that the trough that formed in June is in fact of 18-month magnitude. Price is now bouncing out of that 18-month cycle trough, or perhaps 40-week cycle trough that formed in June. Let's switch back to the other analysis and focus in on the detail and discuss what I mean about looking at the shorter time frame charts to clarify our understanding of what is happening. So here is that first analysis based on the default nominal model, which has a 40-week cycle trough over here in the middle of June. As discussed in last week's video, if memory serves me correctly, the 40-day cycle trough formed over here in about the middle of July. I spoke about the possibility that this 80-day cycle trough would turn out to be a straddled trough. I also spoke about the meaning of a straddled trough in last week's market update, so I would encourage you to go back and take a look at that if you don't understand what a straddled trough is. In very simple terms, it is a trough that is not very significant visually on the chart. In other words, price doesn't come down very strongly into that trough and then bounce out again. It is often a barely detectable trough that forms. Now, an interesting thing developed last week, which is that we have our circle and whiskers for the 80-day cycle trough, and the 40-day and the 20-day and all the shorter cycles, and they are forming a nest of lows. This is a nest of lows where you get a cluster of these circles and whiskers, one above the other. That forms a nest of lows, and you will notice that it is pretty much centered around the beginning of last week. And that is why, of course, I discussed the idea of a straddled trough, because I thought it was possible that the 80-day cycle trough was going to be a fairly subtle affair, and that it would be little more than a blip on the way up because of the bullishness from this 40-week cycle trough. Bearing in mind that we are also considering the possibility that that might be an 18-month cycle trough, which would certainly explain the bullish bounce out of that trough. So, is it possible that an 80-day cycle trough did in fact form? It is certainly possible. Let me zoom in a little bit and let's display the 20-day FLD, which, as you know, is an FLD that I constantly refer to in these market update videos because I track the interaction between price and the FLD of the 20-day cycle. In fact, I track the interaction between price and all cycles. The interaction follows a fairly regular sequence, as I've discussed in many of these market update videos. Here is that sequence again. I went through it last week and probably the week before, but just to remind you, here's our A category interaction where price crossed above the 20-day FLD. The B category interaction occurred over here where price came down and found approximate support. You will notice it slipped below the FLD over here. That's the kind of thing that you will see. This is not an absolute science. So then price, that was the B category interaction, I should say. The C category interaction is where price bounces back up above the FLD. D category is where it comes down into the 40-day cycle trough. So far in the sequence, we're not seeing much evidence of bullishness at all. And in fact, the move down below the 20-day FLD didn't quite reach its target. And that was our first indication that perhaps there was a bit of bullishness coming into the market. Then, of course, price crossed above the FLD. That was our E category interaction. So far, so good. Then we were looking at price coming down into the 80-day cycle trough. The next interaction that we expected was, of course, for price to cross down below the FLD, which would have been our F category interaction. However, as mentioned in last week's video, I thought it was very possible that this would turn out to be a straddled trough or a very subtle trough that formed in the markets because of the bullishness that we were seeing in this market. And indeed, price only came down to the 20-day FLD. When price came down to the 20-day FLD and crossed below it, that does not negate the entire sequence. It certainly does raise questions because when price finds support at the level of the FLD, we would expect that to be at the time of the first 20-day cycle trough. This was certainly not the first 20-day cycle trough. So what was happening? Well, given the combination of various factors and the bullishness that we were seeing in the markets, I believe that the 80-day cycle trough formed over here at the beginning of last week. The fact that price failed to get down below the FLD is not a failure of the system, as it were. It is simply an indication of a tremendous amount of bullishness in this market. Now let's take a look at the other analysis, which considers that the trough that formed in the middle of June was an 18-month cycle trough. I've zoomed into about the same sort of time frame here, and let's add the 20-day FLD. There it is. The important thing, of course, about this analysis is that we have an 18-month cycle trough. You will notice that the interactions between price and the FLD are very similar to the interactions that we saw on the other chart. The FLD is ever so slightly displaced. It's brought a little closer to price because the FLD is displaced according to the recent wavelength of the cycle, and the recent wavelength of the cycle in this analysis is shorter than the recent wavelength of the cycle in the other analysis. You will notice a very interesting thing. In this analysis, Sentient Trader has already positioned its diamond at the foot of the chart over here. It has, as a matter of interest, positioned it before the weekend. I think a slightly better position might be after the weekend. Nevertheless, it has positioned that 80-day cycle trough over there. Now, what if you weren't watching this analysis? I've mentioned several times that you never wait for the diamond to be placed. The important thing is that you have an expectation. So let's delve a little deeper and take a look at some 1-hour charts. First of all, let's just go back to the other analysis and consider what we were expecting last week. The most obvious feature of last week is that we have this nest of lows for the 80-day cycle trough under the price action for last week. and so we were expecting an 80-day cycle trough. I considered it likely that it was going to turn out to be a straddled or a subtle trough that was forming in the markets. So that was the situation. With that expectation, we can take a look at some shorter charts. I'm actually going to go back in time because we have recently been sending shorter time frame charts to our Discord channel, and we've been testing the process to Twitter as well. So there was a tweet last week which was quite interesting. In fact, there were 2 tweets that we are going to take a quick look at. Let's see what happened. Here is the tweet that went out, and this was also posted to our Discord channel. I would encourage you to join the Discord channel, because on the Discord channel we can have conversations and we can discuss the meaning of these alerts that we receive from our sentient bot. And the alert here was the fact that price had touched the 1-day FLD. So this is the 1-day FLD that you see on the chart. This is a 1-hour chart, as you can see over there. So why was this important? Why was this useful? Well, here is the start of the week's price action, and so this is what has happened in this analysis on the 1-hour chart. A few things to point out. Here is the whisker, in other words, the line that represents the range of reasonable time in which the 80-day cycle trough could form. This is the 80-day cycle whisker at the foot of the chart. So that line is telling us, and of course we would need to look at the longer time frame charts to set the context, but hopefully having watched last week's market update video, you would understand the context, which is that we were within the reasonable range of time for an 80-day cycle trough to form in the markets. You can see that the software has identified a 10-day cycle trough. So what does that mean? It means that this is probably the final 10-day cycle in this 80-day cycle. Does that make sense? So somewhere over here to the right, we are expecting that 80-day cycle trough to form, but we had a 10-day cycle over here. Now, when you have this line above a stack of diamonds like this, you have to ask yourself the question, is it possible that this is indeed the trough of the 80-day cycle? There is a problem when it comes to performing Hurst cycles analysis, not a problem, a danger, which I call counting the shorter cycles. You get very trapped into counting your shorter and shorter cycles, and you say there needs to be one more 10-day cycle, then there must be another 5-day cycle, then a 2-day cycle. Eventually you're all the way down to 5 hours, and you're saying there has to be another 5-hour cycle before the 80-day cycle trough can form. That's dangerous because you need to keep your mind open to the possibility that because we are in the reasonable range of time for the 80-day cycle trough to form, it is possible that this could be the 80-day cycle trough that is formed in the markets. So this was on Tuesday, I believe, this low price over here. And so on Tuesday, it is possible that that 80-day cycle trough formed. Now, looking at the 1-day FLD is a really useful thing to do on a 1-hour chart, because starting from a trough of at least 10-day magnitude, we witness the same sequence of interactions between price and the FLD. Price crosses above the FLD. It finally crosses above it over here when the US markets opened. That would have been on, what day are we looking at here? Wednesday, I think. And so that was our A category interaction. The B category interaction, where price is expected to find support, should occur at the time that the 1-day cycle trough forms in the markets. I should have said the time at which price is expected to find support at the level of the FLD, in this case the 1-day FLD. That is expected to occur at the time that the 1-day cycle trough forms in the market. Here is the 1-day cycle trough. Did price find support at the FLD? It didn't get anywhere near the FLD, did it? Here is the FLD still all the way down here. What does that mean? That is a sign of bullishness. A sign of bullishness this early in the cycle does strengthen the concept that this is in fact not just a 10-day cycle trough, but an 80-day cycle trough. So to be clear, I am expecting that the 80-day cycle trough might form this week. We have evidence on the chart that a trough of at least 10-day magnitude has formed, but I'm asking myself, because of this circle and whiskers, or in this case only the whisker is visible, but because of the circle and whiskers, I'm asking myself whether this might be the 80-day cycle trough. The first piece of evidence is the fact that we have an A category interaction that turns out to be very bullish, increasing the chances that the trough that formed on the 9th of August was indeed a trough of 80-day magnitude. Now, what about this alert over here? I've already mentioned the B and C category interactions, which are almost undistinguishable on this chart. B is as price comes down towards the FLD. C is as it moves away from the FLD. As I mentioned, quite hard to identify there. But the interaction between price and the FLD, as price comes down to the 2-day cycle trough, there is the nest of lows for the 2-day cycle trough over here, very early on the 12th or perhaps late on the 11th. The interaction as price comes down to the 1-day FLD on the way to the 2-day cycle trough. I do hope this is not confusing. I'm trying to make it as clear as possible. The interaction as price comes down to the 1-day FLD on its way down to the 2-day cycle trough is the D category interaction, where we would expect price to cross below the FLD and generate a target to the downside. The target to the downside, very roughly, just looking at those grid lines, would be over here. In fact, let me switch to the original screenshot instead of looking at the tweet. That way we can see it in a little more detail. Right, here we go. This is the original screenshot, and you can see price has just come down over there. 1, 2, 3, 4 grid lines, 1, 2, 3, 4. So we'll be looking at a target over here, and that is our D category interaction. And that would be the target for the 2-day cycle trough to form. But now let me ask you something. If it is possible that this is an 80-day cycle trough, would we expect this short target to be reached and exceeded, or might we expect that the 2-day cycle trough actually forms a little bit higher than the target generated by price crossing the 1-day FLD? The answer, of course, is that given the recent bullishness in the market, we might expect the target not to be reached and for the 2-day cycle trough to form at above that level. Now, let's take a look at the next tweet that went out, and we'll just stick with these full screen images for now. Here is the next tweet that went out, and it went out only 2 hours later, I think. And this is the price meeting the 2-day FLD. So this is the 2-day FLD. Here again is our 10-day cycle trough, possibly an 80-day cycle trough. Here is the nest of lows for the 2-day cycle trough to form. What do we expect to happen here in terms of our interactions with these FLDs? Following a trough of at least 10-day magnitude, we have price crossing above the FLD in an A category interaction. As price comes down to the FLD at the time that the same trough is forming in the markets, we expect price to find support at the level of the FLD. On the Discord channel, I actually posted a note about this and mentioned that we are expecting price to find support at the level of this FLD. That was early on the 12th of August. So that was early on Friday, I suppose. Looking at this FLD, if price is going to find support, it's going to have to generate some bullishness. So we have some interesting things happening here. I think it is possible that an 80-day cycle trough has formed. And of course, this is only the first 80-day cycle trough following a 40-week or possibly 18-month cycle trough that formed in the middle of June. Now price is at the level of this 2-day FLD. I am expecting price to find support at this level. Let's take a look at what happened. This is a screen grab that I took earlier from the same system that generates these alerts. And you can see the FLD isn't actually highlighted. I've kept it fairly thin on the chart so that we can look in detail at what happened. Here is the 2-day cycle trough that has been found in this analysis. Can you see that the analysis still has a 10-day cycle trough over there on the 9th of August, but there is the whisker for the 80-day cycle. So we still have that question first and foremost in our minds. Is it possible that this is an 80-day cycle trough that has formed? Can you see what price did as it tracked through the night into the 12th of August, and finally in the New York session, when the New York markets opened about here, and finally price broke up away from the FLD. So this FLD provided fairly good support for price throughout the night on the 12th of August. Sounds a strange thing to say, but as the New York markets opened, price managed to surge upwards and left behind it the 2-day cycle FLD. So if we go back to that first target generated by price crossing the 1-day FLD, I don't have it plotted on this chart, but you will remember, and you can go back in the video, it was somewhere over there, and we generated a target somewhere down here. I'm not being accurate, you can calculate it accurately yourself. But as I mentioned, the 1-day FLD target was unlikely to be reached because of the bullishness we were seeing. The fact that it was not reached by the time the 2-day cycle trough formed in the markets reaffirms the fact that this market is fairly bullish. So to come back to our premise that we started with at the beginning of the week, is it possible that the 80-day cycle trough has formed, or does the 80-day cycle trough still lie ahead of us? Let me ask you, what shape would you expect from the final 10-day cycle before an 80-day cycle trough forms? I hope that your answer is that we would expect a bearish shaped cycle, because the final 10-day cycle and an 80-day cycle must be a bearish shaped cycle to bring price down into that 80-day cycle trough. Because of our study of this 1-hour chart, I hope you can see that the evidence seems fairly clear that the 80-day cycle trough has formed. And so let's bring this back to Sentient Trader and let me provide a neat summary, I hope, of the content of today's video. I was asked in the comments last week to provide a summary at the end of the video, so that's a really good idea. That's what I'm going to do. This is, in my opinion, an 80-day cycle trough that has formed in the markets, and I hope that this video has shown you how, even though in the analysis we were looking at earlier, on the daily chart, we didn't yet have confirmation that the 80-day cycle trough had formed. Looking at the intraday charts gave me confidence to be able to position the 80-day cycle trough at that position over there. And so we have an 18-month or possibly 40-week cycle trough that formed in the middle of June. I am tending towards the idea that this was an 18-month cycle trough because of the fact that this move has been more bullish than might have been expected if this was a 40-week cycle trough, although that's a fairly subtle point, so there isn't really much to argue about it. What are we expecting now? Well, in last week's market update video, I presented the composite model line. Let's do that again. And I was speaking about the next peak. And I was speaking about when we could expect a peak to form before the next 20-week cycle trough. I was amused. There were some comments. I think some people misunderstood the title of last week's video because I was not speaking about the next all-time peak. I was simply speaking about the next peak that we are trading towards. And because of the fact that the 80-day cycle was expected to be a straddled trough, or at least I thought it was going to be a straddled trough, the next peak that I'm trading towards is the peak of the 20-week cycle, because price is probably going to come down to form a 20-week cycle trough. As a matter of interest, where might that 20-week cycle trough be? Well, first of all, before we get to that, let me speak about the peak here, because the composite model line gives us a fairly clear idea of when that peak is going to form. Remember, the composite model line is very good with timings, not so good with actual price levels. Price is way above that price level, which is another indication of the extra bullishness present in this market. But certainly over the next 2 weeks or so, we are expecting a peak to form. It's not impossible that it could form sooner than this, but that's our expectation. And then price will come down into the 20-week cycle trough. The composite model line displayed on this chart shows that the move down into the 20-week cycle is not expected to be a very strong one. That's because of all that bullishness from that 18-month cycle over there. Where might the 20-week cycle trough formed? I'm sure that you know the answer to this. Let's take a look at the 20-week cycle FLD. Let's turn off the composite. Actually, let's leave that on for now. And let's point out what we are expecting in terms of price interactions with the 20-week FLD. Here is a trough that is at least 2 degrees greater magnitude than the 20-week cycle. There's the 20-week cycle. If this is an 18-month cycle, then here is our first interaction where price crosses above the 20-week FLD, generating a target to the upside. You can calculate that target for yourself. It's pretty good, healthy target up to the top there. And here is the nest of lows for the 20-week cycle trough. What do we expect to happen between price and the FLD at the time that the 20-week cycle trough forms? We, of course, expect this FLD to provide support. So we are going to be watching this level for this FLD. The composite model line, you can see, is at about this level over here, but price levels shouldn't be taken too seriously from the composite model line, but we would expect price to come down and find support at the level of the 20-week FLD at about the time that that trough forms, which is expected late in September. I do hope that you found this market update useful and interesting. If you have any questions, please come along to our Discord channel and get involved in the conversation, or you are welcome to add them to the comments below this video. Also, look out for some exciting announcements this week. I am planning to do some live streams on YouTube, so look out for those. I hope to see you there.